Hi, everybody. Chris Lawhead here. So the Fed lowered their interest rate to zero on Sunday. Within an hour, I had a dozen calls, maybe 20 text messages, and a whole slew of emails. Um, Let me be very clear what the Fed cutting interest rates does for mortgages. It does nothing. Okay, the federal interest rate, the Federal Reserve lending money at 0% is to large institutions, large banks for very short terms. And so we're talking overnight. And so what they're doing is they're lending to big banks because in the coming weeks, with all this chaos, businesses might have a hard time borrowing money from banks. So the Fed says, hey, we're going to loan these big banks short-term money at 0%. So now these banks are a little more confident to lend money out to businesses and keep the economy going. Okay. Finance and the flow of money is like the circulatory system of an economy. So that's what it does. So just because the Federal Reserve is lending huge financial institutions huge chunks of money at 0% in very short periods of time, 24 hours, 48 hours, doesn't mean anything for mortgages. Nothing. It does not correlate. So I want to be very, very clear with that. So nobody's going to be getting 0% mortgages anytime soon. Okay. Let me cover a few of the other big questions that I'm getting. So people are hearing that the Treasury bonds, the bond market is at a record low. And shouldn't my mortgage rate be lower? To a degree, the bond market affects mortgage rates, but more specifically, mortgage rates are determined by the price of mortgage-backed securities. Mortgage-backed securities have their own market and their own supply and demand. And over the past few weeks, these mortgage-backed securities have been overwhelmed by demand. Okay, mortgage rates dropping, a tremendous amount of people start refinancing, and it is really, some lenders are simply at capacity, which is pretty crazy. So that's why, in a reaction to that, mortgage rates have actually gone up a little from bottoming out, I don't know, about 2 weeks ago. So there's that dance is happening. Okay. Another big question is, what's the government doing about mortgage rates, right? So the Federal Reserve has agreed to buy some of these mortgage-backed securities. And by them buying a big chunk of these mortgage-backed securities, that should normalize the market. We are seeing rate fluctuations multiple times a day in more dramatic ways. Sometimes just in the last few days, we've seen movements that prior to this era might have taken months to move that much. So it's quite volatile out there. And then the final question that most people are asking is, what can we expect? The short answer is, I don't know, right? Yes, I'm a mortgage professional. I've got my 10,000 hours of practice. I've got my gray hairs. I've partnered with, one of the smartest guys I know, Brian Emmett, who's the owner of Excel Financial Group, our wholesale mortgage broker shop. But we don't know. These are unprecedented times. The indicators that I see say that mortgage rates should be going down, but they're not. And that's in a reaction to all the volume that was spurred on, all the people refinancing. And the bond market, yes, it looks like it should be pushing these rates down, but it's not. The volume, again, is keeping these, wiggling and squiggling. And nobody knows what happens during a global, pandemic. Okay. People who claim they do, I just don't buy it, because these models are breaking left and right. Okay. We're in unprecedented times. So what do I recommend? I recommend, obviously, if you can lower your interest rate significantly and lower your monthly payment on your mortgages for your investment properties or your primary residence, I think you should seriously consider that. I think if you have a mortgage rate at 4% or higher, you need to call your trusted mortgage professional. We are doing cash out refinances for some who have no reserves. So some people are actually pulling equity out of their house to have cash reserves to weather this storm. That's another option. The short answer is always, it depends. it might make sense to stay put. It just depends on your scenario. So that's why when I look at somebody's entire picture uh, in regards to the biggest debt tool of their entire life, which is their mortgage or mortgages for real estate investors, it's not an answer that you get in 30 seconds. And sometimes it's not an answer that you get in 30 minutes. Sometimes we have to consider these all these factors for an hour or two, or even sit on it and look at it for days. So there's the short nitty gritty answer. I wanted to put this out to at least start conversations and advise people on the basics, right? The Fed cut does not affect your mortgage rates, and then what's to expect, what we should expect in the future. What I expect in the future is we're going to get through this. We as a planet, as a species, will get through this. And I don't want to get all kumbaya on you, but the struggle can be the blessing, right? There's a tremendous amount of opportunity here that we might not be seeing, and yeah, there's going to be some serious character building throughout the planet, and people are going to be hurting, and that pain can be a blessing or it can be a curse depending on how you react to it and how you view it. So anyway, there's the short nitty gritty. I hope you're all well. I hope you're all safe. Hope you're with loved ones. And of course, if you have any questions about any of this stuff related to your mortgages or your portfolio of rentals or your first time home buyers or whatever it is, me and my team are available. We're all working remotely, but we're here to help. So it's like that. Take care, everybody. Bye-bye.